Let's head to the futures pits on this Jobs Friday. Bob Iacchino is the founder of TradersOutlook.com. And Bob, the futures are a little lower this morning, but this comes after an incredible week and getting the market back to levels we haven't seen in over 2 years. What happens today on this jobs announcement?
Well, the market got what it wanted with the elections. It got what it wanted with the QE2, with what it was expecting with the QE2, what it was expecting with the elections. The range of numbers is not that great for the non-farm headline number and not that great for the unemployment rate. So I really believe that the best possible situation for a medium-term continuation of the up move is for the market to get what it expected or slightly better. I never feel like a big move, a big fluctuation from the number from a trader's perspective in either direction is going to help the market for a medium-term move. And these big spikes, which I don't consider yesterday as one, I consider yesterday to be just a larger sustainable move. Those big spikes aren't good because they bring on profit-taking. We don't have the jobs foundation that we need to go along with all the other short-term good news we've gotten.
What's the bigger risk, though? If the market is the market in a situation where you think there'd be a big sell-off if that number is much weaker than expected?
I don't think the market is set up for a big sell-off. I think the market is set up for buyers of dips. Again, we're coming in toward the end of the year, and I hate to start talking about institutions and traders closing their book already on November 5th, but you've had a really good run. The S&P's up 9.5% just on a price basis only as of yesterday. And really, given what's going on the last 3 years, that's a really good year, and that may be what investors need to get used to. So you could see some of the larger fund managers, some of the larger individual traders start to slow down their trading. That doesn't bring the volume in, but still the gains are the gains, and they've been there, and I think they're going to remain for the end of the year. So the bigger risk is definitely a sell-off, but I don't think it happens today.
Well, how important was the president's announcement yesterday that he'd be willing to compromise, again, reiterating that view, that he'd be willing to compromise on the tax cuts and potentially extend them to all Americans by the end of the year?
Well, it's funny you mentioned that. I think that was huge, even though the effect of that extra sort of bend but not break view of not allowing the taxes to hike on the top tier percentages either is more, I think a gesture than anything. It's not going to have a tremendous effect on the economy either way, but it does show some cooperation in the only area that traders and business people seem to not want gridlock, and that's in the extending of the Bush tax cuts. It's the only place we don't want. We want action on that. Everywhere else you hear everyone talk about, oh, this is great, this is going to be gridlock, so now we can take the new rules and just sort of see where we can make money out of them. That's the general view. So I think that was huge yesterday. I think it was a big move toward healing some of the political problems that have cast a pall over the volume side of the market.
All right, Bob, thank you. Have a good weekend.
Thank you. You too.